Good afternoon. Welcome to the TheoTrade afternoon video. I'm Blake Young. Today is June 27th, 2024, and we're going to talk about the basis of the basic materials and maybe the new industrial revolution. Now, when we look at the S&P 500, just the last 5 days, this is just a rolling week, the worst of these instruments as far as the performance of the sectors has been basic materials and industrials. And utilities right after there, actually. Utilities have pulled back, but they're near their highs. The difference is basic materials are near their multi-month lows, while they're also at the low for their week. Up at the top, we still have technology pushing things higher, and surprisingly, discretionary is pushing back higher, so we're betting on the consumer again. Energy's on the rise, and we're really getting that differentiation of the disconnect in those major sectors. So if we look at these, we can look at the individual sectors and see some of the strength and weakness in the last week, but also compare that to the longer time frame. Now, you might note that basic materials have had a really good year from November till about April 1st. After that, we paused, we corrected from 94 all the way down to 87. So we saw a significant pullback, almost 8%. And then we bounced back up, creating a lower high, and here we are retesting the floor. Normally, I'd say if you're in an uptrend, you stay in an uptrend. And if you're in consolidation and in an uptrend, you would expect the move to continue to go higher. However, basic materials have pushed back to the recent lows, so this is a setup for lower highs, lower lows, and a lower close, which means I expect basic materials to continue to drift and potentially go all the way back down to 82. And at 82, basic materials would be falling from its high from 94 to 82, and we're talking about a 12-point move and a 12-point move on a $92 peak is pushing you to about 13 to 15% correction off the highs. Now, that's not an end of the world, but it's certainly going into a corrective wave of more than 10%. And if we see basic materials, the raw goods and even services that would go into the manufacturing of products, if basic materials are at their lows and possibly coiling up to move lower, 10, 13% correction lower from here, then we would also assume that industrials probably aren't going to maintain either, because basic materials should be rising and falling with how industrials and manufacturers are buying. If you think about some of the reports that we watch from economics, we watch for Purchasing Managers Index, the PMI, Institute of Supply Management Purchasing Managers Index, and it's a mouthful, is trying to watch the earliest components of manufacturing to determine how the purchasing managers are buying and buying products to make products, meaning they're buying raw goods and services or things they can do a value add. And if they're not buying, then we see that as a slowdown in manufacturing and a slowdown in the economy. If basic materials are falling back to its support and industrials are also falling back to its support, then we're looking for this to break through its low. And if it breaks through this low about 120, we're talking about a move from 126 to 120, about a 6-point move. Now, that's only about a 3 to 5% decline. But the next major support level is all the way down here at 110. That was the previous low, previous high. So if we break through this pattern, it could be enough acceleration to see the break of 120 and not just push down the price pattern target, but all the way back down to 110. And then we're talking about a move from 126 to 110, a 16-point move. And again, we're talking about a 15% potential decline. And that puts us in a major corrective wave. And normally in these Thursday afternoon, I like to focus on the large sectors and large ETFs. But as we're looking at this, it looks like Caterpillar already led the path. And so Caterpillar has already created a similar pattern, but both basic materials and industrial has, that we dropped, pulled back, created the lower high, went back to that low support level, but we broke it. We cracked the infrastructure, cracked the lows there, and returned back. So I still see this as a reasonable place to take a look at a short position, because the pattern that we're seeing, we go from 379 down to 330. We'll call it 380 to 330. That's a 50-point move. And from 360 to 330 is a 30-point move. So I'm looking for a 30 to 50-point move lower from our current price, about 330. So that means 300 or 280. Now 280 makes a lot more sense to me as it's hitting this low, and this to at least appears to be a retest of previous support as a rejection, as new resistance, and we could be looking at that move down to 280. And so there's some real opportunities in here as well, looking for 30 to 50 points. We're talking 10 to 15 to 20% decline from the current price, let alone from the peak. If we can get down to 280, we're talking about a 30-some% correction in Caterpillar. Deere and Cummins kind of look similar. They're not all the same setup, but they're going to give you a little bit of a similar type of, we broke through support and we bounced to retest a key level. And so even though this is not at the recent highs, you can see where my cursor is. Deere is at its previous gap, support, resistance, gap area through here. I like Caterpillar a little bit better than what we're seeing here, but it's still something to at least look at. Also in the same area of equipment, like I said, Cummins diesel. This has created the lower highs, broke through the support level, bounced back up. Now this seems to have cleared the previous support, I would say. It is near the short-term resistance, and this I would want a better confirmation from, but if we can get through this low through here, we continue the downtrend, and these swings have been quite dramatic, where we're talking about 10 to 15% swings on all of these. And if this is the next peak, I'd be looking for a 28 to 30 point move lower here and looking for a test of about 250, 255. That would be taking us all the way back to the last major gap and the previous resistance on Cummins diesel. On the opposite end of the spectrum from this last week has been energy, and we're looking at this major decline that happened in April and May. We based out past the time we would normally expect to see the travel lift, the seasonality of travel lift oil prices, and yet we finally reversed, and we reversed from 72 all the way to 82. Now 80s has been a key level before. You can see way back here, $80, $82. This previous resistance, support, 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 resistance, all the way through to the current price. But this is a big enough expansion that even if it goes into a holding pattern here and a big enough recovery off the lows at 82, that this will benefit the energy sector. I don't need crude to move anymore. It can go flat here and energy will do well. If we look at energy prices, energy sector specifically, XLE, we've recovered and are just sitting here. If we can clear this high, this bounce could push us up to 92 and potentially to 95. Now that is only a 5% move up higher, but I do think that is a reasonable target. And it is also facing the break of the downward channel. So the channel that crude broke out of, energy has not. And so the break of this channel should replicate this channel. And this channel, we're looking at a move of nearly 5 points. So a break through this high should see a 5-point move. That would take it from 92 back up to about 96 or 97. Not quite the high of the year, but it does look like there's some potential if we can clear those highs. If crude stays where it's at or climbs, then energy should be able to break through its short-term resistance. We should see the margins improve for energy, and we should see it push back up to 97, 98. And one that is really interesting to me is ConocoPhillips. Not because this was not a scary decline. We went from 135 all the way down to 107, so we saw nearly a 30% decline. But because it has also broke through its channel resistance. It has also broken out like crude did. And at this point, it cleared the last resistance area. So if this creates a higher low, not only could we push back to 120, but maybe we do like XLE and push up to near the previous highs. So there could be a significant opportunity in this, about 15 to 20% upward movement if we can clear this high on ConocoPhillips. Now this high is the area that we've been rejecting. So I do want it to break here. This is a gap area from back here, a resistance area at about 115, 116. If we can break there, we could go 15, 20% higher in ConocoPhillips. Well, that's going to do it for me today. Thanks for watching. Join me again next week, and we'll look more at the sector rotation.